What's going on, guys? We have an awesome show for you today. Another awesome guest. I'm Dane. This is the DeFi Crypto Alliance show, where we are doing our best to bridge the gap between entrepreneurs, real estate investors, and crypto to help everybody take advantage of what we feel like is the biggest opportunity for the next few years, that being crypto. So if those are topics that are interesting to you, you're in the right place. We appreciate you tuning in. Make sure to smash the likes, subscribes, all that stuff is really helpful for the algorithm. We can pump all of our bags. So it's going to be fun today. With that, Corey, go ahead and take it away.
Absolutely, man. Crypto Millionaires with Corey Geary here, and you're absolutely correct. This is DeFi Crypto Alliance, where we're doing our best to probably use cryptocurrency as a wealth creation tool and then using real estate as a wealth preservation tool. And we are in the right place at the right time in this crypto market, and it's just been a blast. And man, I have an amazing guest on today. He's been in the Hex ecosystem for quite a while. I'll let him tell his story, but man, he's been doing an amazing job of charting on Twitter and basically keeping us in the know of what the next moves are potential for Hex. And I mean, I've been following you very closely, Tobi Wan, and it's been awesome to see your Twitter blow up and your charting be right on point, which is really cool. And man, why don't you tell the audience who you are, where you're from, tell them a little about your crypto background, how you found Richard Hart, all that great stuff. And yeah, we'll go from there.
Sure. Yeah. Thanks for having me on, guys. It's like, I know we've been trying to put this together for a little while, and, family first. I had some stuff with my parents going on with the Rona, and we're over the hump with that. I actually got to take my dad to a follow-up visit this afternoon, but all is well on that front. And between Corey Costa and Maddie and Papa and DJ Cryptomatic over on Wake Up Hex wearing me out streaming all the time lately, it's like I just had a hard time fitting you in. But I appreciate you being patient with me, and I'm really happy to be on with you guys. I appreciate what you're doing out there in the community and hustling, keeping on educating people, right? Because it's like I've been known to say, it's like making the money is only half the battle. The other half is keeping it, right? So, tax mitigation strategies, other investment stuff, like not everybody wants to be in the most volatile asset class in the world with everything they own, right? They're not all crazy degens. Right. No, that's a little nauseating. That can definitely take the wind out of your sails a little bit. But as far as kind of my start, it's like it kind of depends on how far back you want to go, but I'll try to keep it concise because I can be a bit long-winded, and I know we've only got an hour. But basically, my brother started showing me candlestick patterns when I was like 8, and he was doing financial planning and some money management stuff for a corporation here in town. Right out of high school and into college. And so I got a taste for it then. And then in high school, I was dating a girl who's, they would have poker nights. So I got my family was super Christian and we didn't gamble. So I got the taste of gambling. And then I went with them on a trip to Vegas and got the taste of playing at the tables and playing blackjack. And then being a math nerd, I learned to count cards. So I was doing that actually for a living through college. So that was super fun.
I used to deal blackjack, bro. I dealt blackjack for 16 years.
Oh, did you really? Right on. Yeah. So I'm sure you've got some, we'll have to talk later. I'm sure you've got some stories, but I have
horror stories too. Good stories and horror.
Right.
Yeah. That's
and totally. And then I saw probably my craziest one is there was a younger guy that was playing with me one day, and you could kind of always tell, especially if you're counting, you could tell if someone else was too, just mostly with their bet spread. And he was just an idiot. He was jumping from a $25 bet to a $500 bet. And he was pulling chips off the table and putting them in a fanny pack, all the things you shouldn't do, right?
You recognize that as floor bosses and pit bosses. Yep.
Dude, and this was a riverboat casino in Southern Indiana or something, right? In the 90s. And there were 2 gigantic guys that literally came and grabbed him by each arm. And I never saw that dude again. And they told him and he started to reach for his chips on the table. They're like, leave it. We know what you've got. And that's all I heard him say to him. And then he must have known the jig was up, and they carted him out of there, and the dealer raked his chips, and I never saw that kid again.
Wow.
So yeah, it's and then the only other time that I got close to getting popped, I was in Vegas, and I was there for a wedding, and the groom, I just told him, I said, and I never ever drank when I played because I wanted to keep sharp. And the groom, I told him, I said, hey, dude, I'm like, whenever you see me up my bet, up your bet. I'm like, because we're just going to keep it real simple. And it's like, you're likely to get a 20 or 21 if you see me jump on my bet. So he was drinking and he wasn't paying attention. So I'm like bumping him under the table, and he's like fumbling with his chips and like trying to stack more on. So obviously the eyes are on us. And it was like, this is like an off the strip casino. And it was like this old kind of crusty dealer. And he was flicking the cards at me so hard, he actually cut my knuckle. Like, he wanted me off that fucking table. And then they brought a pit boss over, and they started shuffling after every hand. And it's like, and it was like a $5 table or something. It wasn't even anything like I was going to hurt them. But they did not. They knew that we were skilled players, and they didn't want any part of it. But yeah, but I did that for a while, so that kind of lit the fire in me as far as degen, mad gains mentality. And then in the 90s, I started doing some day trading with stock. And that was my first wreckage experience. Dude, I don't even want to look back, because it's like at one point, I don't know how much it was. It was about $50,000 worth of Amazon that I held in like 1997. Oh. And I literally refused to go and do the math to see what that would have been worth had I just held it. But I traded that and like a few other stocks and like some biotech companies. And then there was infamously the tech tumble of 2000. And you can see it on the S&P and on the NASDAQ and on the Dow, giant dump. And I was wrecked and like pretty much put me into bankruptcy. So went from almost a multimillionaire. I was super leveraged. I was like doing all the crazy shit. I was trading on margin. I was in college, so it's like I had all this free, like back then they would just throw $25,000 credit cards at you, even if you didn't have a job, just free money. So I had all these cash advances that I was using on top of money I already had. And then on top of that, I was margin trading it. And then, yeah, so that was the whole thing. And I actually got a day trading suspension at one point because I was literally at the library. This is like how long ago this is. I'm at the library in the morning trading, right? Because their internet connection was faster than on my apartment. And so I would sit there and wait for the opening bell, and I would trade. And then if I'd made a bunch of money, it's like I was bartending in the evenings. So I would call and I'd be like, yeah, I made like $13,000 today. Like, does anybody want to pick up my shift? And then 3 days later, it'd be like, I lost like $7,000. Anybody want to give up a shift? So that was some crazy time. Right. And then with that janky ass connection at the library, I put an order through, and it was like 50, I think it was around 50 grand, and it didn't go through. So I'm waiting for the confirmation. So I hit the back button, and it's all sitting there like you'd think it would be. And I put it back through again. And then all of a sudden I get two confirmations. And I'm like, wait, I don't have that much money. It's like, how did they let me buy that much stock? So I'm like, being a numbers guy, I'm like, okay, well, if I'm looking for like a 1% move to like make my nut for the day, now I only have to get a 0.5% move because I got twice as much capital, in stock now. So I was thrilled. And then I get a phone call and basically they tell me like, hey, you've got to put like $25,000 like in your account. It was like a Monday. You got to have that in your account by Thursday. And I'm like, what? Why? And they're like, well, you basically you bought with more money than you have. So you have a certain number of days to make good on that. And I'm just like, well, what if I don't have it? Right. They're like, well, then you need to liquidate what you have. And basically you will be banned from online trading for a year. I'm like, okay, then I guess if that's the worst of it, I'll take that. So then I went from that to being the guy like in a John Hughes movie, like on the phone with my broker like in the hallways at my college on a payphone, calling my broker to call trades in, and like just kept going. Great. So I did great
on your life, man.
Dude, it was a little wild, but yeah. So it's like I did that, ended up wrecked with the tech tumble of 2000, and pretty much stopped doing all that.
Stories you've had on here, bro. Sorry, I just had to. One of the greatest stories of back history. Somebody go on,
dude. It gets. I mean, unfortunately, I didn't learn my lesson completely. So, what was it like 2000? I think it was like 2001. shortly after the tech tumble of 2000, I started playing blackjack again, and I was doing really well. But the girl that I was dating wasn't thrilled about me being a bartender and playing blackjack. And so I'm like, those are, okay. So I went to work for my parents' company, left the job for the girl, and went and had a great time, and had a few drinks, which I never do when I play blackjack, and lost like a pretty good chunk of what I'd earned that year so far. Took the rest of it, took her on this great vacation to the Virgin Islands, and then I didn't gamble again for like 15 years. So I didn't gamble anymore, didn't do any of that. And then it was around 2017, a buddy of mine was like, hey man, you should look into like Litecoin and Ethereum. It's like, it's getting ready to pop, blah, blah, blah. And I remembered hearing about Bitcoin back in like 2011. And that same girl, I was going through a breakup with her. So my head was all jacked up, and I just didn't dig into it like I should have in hindsight. So I'm like, man, it's like, yeah, I think I missed the mark on Bitcoin. He goes, no, it's like, there's still opportunity, blah, blah, blah. So I get into it, and it's like right before the pump to 20K for Bitcoin, right? Wow. A few months before. So I got in at some really good prices, and I'm like tripling, quadrupling my money. I'm like, this is fucking awesome, So I just kept aping more money into it. And then instead of taking profit at the top, which was pretty obvious that we were topping, I just kept buying on the way back down. And I didn't know about the 4-year cycle. I didn't know about any of that stuff. So I just kept dollar cost averaging all the way down. And before I knew it, I'd put like pretty much everything I had in crypto, which was about 300K. And at the bottom of at the bottom of that bear, my portfolio was $30,000. And I thought, and now I'm not a 25-year-old kid like day trading stock. I'm like a 40-year-old, right? I'm like, dude, I can't make that money back. Well, I mean, it took me years to build up that stack. It's like, what the fuck? Pardon my language. And so I end up digging in and like, okay, I need to get better at my TA. It's like, I need to try to trade myself out of this hole, because just buying and watching it go down is not working. It's like the buy and hold. No, it wasn't working for me. It's like, I need to get out of this hole. So that's when I found Silicon Crypto and Eric Crown. So I took Eric Crown's courses. It wasn't cheap, but it was great education. And
for help?
I paid for help, right? Basically. No. Well, no, I mean, I paid for courses. I paid for his technical analysis course, and I paid for one of his indicators, which is called the Joule indicator, which I still use. And it's very effective. And so basically from 2018 to 19, I had built back a pretty good hunk of my stack, maybe got back up to close to maybe 80, 90,000. And then trading. And then I found Richard Hart, and my brother had passed in 2017 unexpectedly. And I was kind of having a bit of a crisis of, what's it called? An existential crisis, right? Sure. So I'm, pretty bummed out about all that. And, I'd lost my best friend and my older brother and my coworker, right? We'd worked together in my family's business for 15, 16, 17 years at that point. And so it was a pretty hard time for me and my family, of course. And then it was probably about not quite a year after that, I stumbled across Richard, and I think it was March of 2018. And he was on Doug Polk's podcast. And I had watched Doug Polk back when it was poker, right? Because it's like, even though I didn't gamble anymore, it's like I liked poker and anything gambling related. It was just entertaining. So I see, it's like, who's this fat dude with the top hat? I'm like, okay. And he's just bagging on Luna, just destroying it. It's like, it's one of my favorite streams to this day. And he's talking about a token that he wants to create called CFD. And it was computational fluid dynamics. And it sounded awesome. It just sounded really smart about using the blockchain to like help scientific communities like work together to like solve real world problems. And it sounded really altruistic. And I'm like, this guy's great. It's like, so I kept following him after that. Well, some of the ideas from CFD kind of morphed into Bitcoin Hex and then ultimately Hex. So at that point, I'm on Telegram, I'm following him on Twitter, I'm doing all the things. But the crazy part and the thing that really hooked me was right after he had streamed, I messaged him on Twitter. And at that point, I don't know how many followers he had, maybe 20,000 or something, not a lot. And I had none, pretty much. And I just messaged him and told him like how meaningful, like seeing him. And he was just talking about meaning of life stuff and like, what you need to do to just kind of feel fulfilled as a human being. Like he had all that stuff peppered in, and yeah, right. And so I messaged him and just told him how much, like, it hit me right at the perfect time. I was really having like this existential crisis, having lost my brother and stuff, and was really questioning a lot about my life in general, and was digging myself out of this crypto hole and everything else. And he replied like almost right away. And it was just like a short reply, but it was really it was well thought out and very kind. And it was, for the longest time, it was like a screensaver for my computer, but it was something to the effect of like, we need to live our best lives. We owe it to those who came before us, and it's like, and it really hit home for me. And I'm like, I love this man. So after that, I was just glued in and like, Telegram, Twitter, all that. And then, so in the beginning of, or the end of 19, when Hex launched, I did not get in day one. I got in day two. So he told everybody to not ape in on day one. I like to tell people that I was smart and took his advice. But the actual thing is that I was trying to get my Bitcoin off of Coinbase so I could do the free claim, and didn't realize, because I didn't have the addresses whitelisted, it was going to take 48 hours. So I missed that by a day. So fucking around with that, I didn't have an opportunity really to do it on day one. So I just got in day two. So I like to say it was because I was smart, but it's like I just screwed up. So got in day two, just threw a little in. ETH was like $150 back then. So it was nothing. And I had good trading bag. So I'd scrape out of that, and I would throw like an ETH in a day for a while. And then as the price kept going down, then I started scaling back, and I was like, oh, maybe I'll do half an ETH today, or maybe I'll just do a 1/10 of an ETH, and then I look back and I'm just like, well,
why
did I just do a whole ETH? You know what I mean? It's like, it's $150. Why did I go down to $15 like on the all-time low day, idiot. But still, I built up a pretty good bag over the year. But I was still actively trading with Eric Crown's guidance. And I built my bag up to just before big payday. I'd gone from 300 grand down to 30, and I built it all the way back up to 286,000. Wow. So I was in profit on Chainlink, Ethereum, Bitcoin. Charlie Lee still owes me $14,000 is the way I look at it. Because Litecoin is the only one that I was not able to trade myself back to black. So, but I infamously took that right before big payday and aped it into Hex.
Giga brain move.
Well, in hindsight now, but it's like at the time, what was really tough is because my charting had been working so well, and I've still got the chart. I can show you guys maybe when we hop over to the TA portion. But in that chart, I had it, and this was like right at the end of October, right? So that's the current chart. Let me see if I can find my Bitcoin chart. But the Bitcoin chart is like, it's silly, dude. So, and I haven't updated the Bitcoin chart in a minute. So it's like, it'll be curious to see kind of what's going on with this. But if we go, see this big triangle on the bottom?
Yep.
Can you guys see that? And can you see this little arrow and like begin bull run ? I'd been watching this pattern forever, right? Forever. Over a year. And I knew.
Just a hair?
Let me see if I can get that a little bigger for you. I can get these other things out of the bottom. Broaden it out a little bit. So that might be a little easier. How's that? Better. Okay. So basically right here, you can see that was October 28th of 20. That's pretty much exactly where I dumped all my shit into Hex. But I saw it breaking out. And I'm like, if we break out, that's the beginning of the bull. And I knew it. And it's like, sure as shit, we break out. And I dumped everything into Hex. And then we took off for Bitcoin. So Bitcoin goes ape. Hex, as we all know, after big payday, dumped to like 0.2% or something, right? Yeah. So in that instant, I felt like the biggest moron ever. But over time, with the big payday bonus and the yield from having it staked, I'm elated. I'm super happy with how it turned out. But briefly, I felt like I had made the biggest mistake of my life. So, yeah. But this is the Hex chart, which we can dig into later. But but so basically that's kind of where I got my start with charting and stuff. And then basically, I use some more advanced, indicators. I still use the Joule, I use some other stuff, but those things are a little complicated. So I was just trying to figure out like, okay, what can I do that people can really kind of follow along with easily and get behind? And pattern training is simple. And it's kind of like, to use like a blackjack analogy, it's like there's some really, like for people that have ever looked into counting cards for blackjack, there are some really, really complicated counts where you're literally keeping track of every card that's played and assigning different point values to those, and then having that running total in your head.
Yeah, +1, -1, +1, negative.
Like, yeah.
I don't know how you guys do it.
And it's exhausting. And it's like, I mean, that's part of the reason I didn't drink when I played, because you really have to focus, because I mean, you're doing tons of math, and then you're trying to mask your play. It's like you don't want to make it apparently you're counting in your head and like looking at everybody's cards. So it's stressful. But then there's simpler counts, and there's like one in particular I used to use called the red 7 count. And you would literally just keep track of 10 value cards, aces, and red 7s. And that was it. And so it made it a lot simpler. And as far as like your edge that you would get, it was only like a fraction worse than if you did the more complicated count. But when you figure in human error, it really ended up being more effective overall, because you were less likely to make a mistake. So I kind of use that same logic with like, okay, well, how can I share this? Because it's like, I like doing it, even though I'm not trading anymore. It's like, I'm just, trying to pick good entries and dollar cost averaging, so it's like, where are good spots to buy? So I thought, well, pattern trading does most of it for you. I mean, it's like, it's showing you time and again, I mean, if we can we'll just jump over to this for a minute, because I think I told you enough of my life story anyhow.
No, that was excellent. Seriously, that's easily been our best backstory on this.
Thanks. I think. Thanks.
Yeah, your Amazon pain there. I don't even want to know.
Yeah, that was a little brutal. Yeah, that would have been a situation where I would have been much better off to buy and hold. But had I done that, I may have never found Richard Hart, right? So
yeah, it'd been a different story.
Yeah. So you've been profitable trading. When you got into Hex, did that change your mindset at all about how you approach crypto, how you approach Hex? Were you trading that too, or staking it?
No, I did a little bit like during the AA. I did a little bit of trading, because there were some arbitrage plays that you could do with Hex, because Hex was trading on exchange, or like on DEXs, right? And some exchanges, but I never messed with those because they seemed a little sketchy back then. And but the thing is like with trading Hex, like I had like I have spreadsheets for everything, but basically I had this spreadsheet where you could kind of see, all right, if I bought Hex today, this is what I'm going to get for this much ETH. If I put it into the adoption amplifier, I'm going to get this much on the same day. So you could kind of like do a little arb play and figure out like, okay, well, I'm going to do better today being in the adoption amplifier, unless somebody huge comes in at the end, which did happen quite a lot. And then other days it made it more sense to just buy it on the open market. So it's like I did a little bit of that, a little tiny bit of trading, and ended up, yielding more Hex out of the deal. But it was just, I don't know. To me, it just felt better to, and at that point, I was still trading my other bag, because it's like that was all during like the adoption amplifier phase, and it just wasn't as lucrative as what I was doing trading the other stuff. So I mean, I was able to stack more Hex by doing a little trading with Hex, but other than that, I've never traded it. It's like I've done some tax loss harvesting, which is definitely something people should look into. So with stocks, it's like there's wash trading rules to where like if you sell a stock that you're down on to lock in a cap loss. You can't buy that same stock for, I think it's like 90 days or something. There's no wash trading rules in crypto yet. So, in the end of 20 and the end of 21, when I was technically down on Hex on paper from what I had in it, I was able to sell some Hex. And this is kind of a funny story. I think it was 20. I think it was in 20. I was literally in a Telegram DM with Richard, and it's New Year's Eve. My fiance's on the back porch trying to figure out how to pop a bottle of champagne. And I'm frantically trying to do my cap loss sales. And it's like, I'm buying it right back, but it's so weird because I'm like talking to Richard, but I'm selling Hex. So I'm feeling kind of conflicted. I know why I'm doing it, and I'm going to buy it back. but it was just all so surreal because it's like back then it's like he was chatting to me like we were buddies, right? So it was just very crazy times. But yeah, so I've done a little bit of selling in that regard, but then I've always turned around and bought it back. And then that way I've got cap losses to eat off of when I start taking profit, hopefully this year. But and that's something we can get into too, because I think there's a lot of misconceptions with people. And I talked to Scott about this, Jim Rat about this, because he was one of the guys that was really vocal when he kind of got lured away by some shiny objects that, you know, the reason the OGs were pushing Hex is that we were trying to get new guys to come in and pump our bags. Mm-hmm. The thing that he didn't get the big picture. And I think there's a lot of people that don't understand the big picture. You have to realize, like, if you're a mid-level dolphin, which most OGs are probably in that range, right? If you're a mid-level dolphin and you got your 10x claim on Hedron, at the current Hedron prices, you're making about $50,000 a year in Hedron.
Wow.
You would never have to sell any Hex if you're comfortable living on 50 grand of passive income. And that's at Hedron's current pricing, right? And so most people aren't living off of their crypto. They're still working a job or whatever. So, you know, when you look at people like myself and others that have got bags and have been in for a long time, there's a high likelihood we'll never have to sell any Hex because you have these free airdrops of other things. There's different, you know, opportunities with loan tokens and other stuff. And then, of course, anybody that's been in Hex for this long, they stacked for Pulse and Pulse X. So, which are likely, you know, going to do many times more multiples than Hex will from here. It's like, I don't think Hex does another 10,000x from 6 cents, right? I mean, I could see us getting to 15 bucks. How
dare you? The maxis are rolling over in their graves right now.
No. I mean, I think Hex could get to $15 to $30. I mean, it's probably not this cycle, you know, but it's possible that we could get up to 12, 15 bucks this cycle. You know, it all kind of just depends on, you know, eyeballs, you know, so it's like it's all the viral, you know, it's all about the virality of, you know, getting the word out. We're we're a microcosm of a microcosm. Crypto is, I mean, you guys know, it's such a small subset of like all the assets out there. And then we're this tiny little piece of that, right? So as more people become aware, which they inevitably will with Pulse Chain and with the documentary and just time, you know, then I think all of that is going to do some crazy stuff with Hex. But Pulse, to my point, Pulse and Pulse X are poised to do a lot more out of the gate. And especially for those that sacrificed, which is a lot of those same OGs I'm talking about, you know, why would they sell their Hex, which I still believe is the best store of value out there? You know, if anything, they were going to take some profit from their Pulse and Pulse X gains and put more money over into Hex. So you're earning your trustless yield, and, you know, and it's simple and straightforward and uncomplicated and no admin keys and all the stuff we love about DeFi, right? So good.
Buy into the narrative of the liquidity bonding, where if Pulse and Pulse X pump, Hex will pump multiples over Pulse and Pulse X because of the liquidity bonding. The Hertz law thing, maybe. There's someone in Twitter going around and preaching that narrative, you know.
Yeah, I don't know, man. It's like I haven't seen the math on that that's convincing, quite frankly. I mean, I think that there could be some of that. It just depends on how things are pooled. You know, if there's a ton of Pulse and Pulse X that's paired with Hex, and then Pulse and Pulse X do what we anticipate it'll do, then, you know, theoretically it should pull that price up. But anytime you're talking about a price going up, you have to consider sell pressure. And if there's people looking to take profit from multiple X gains on whatever it is, then it's not only going to drag Hex back down, it's going to drag back down whatever's it's paired with. So it's going to get crazy. I mean, like, there's going to be some nauseating roller coaster shit on these charts for sure. You know, so that's where, you know, I think guys like myself that have been in it for a long time, we're not as disturbed, right, by the crazy price movements. But speaking of which, we were talking about like what's possible. The bigger pattern that I've been watching for the longest time, like this is our all-time high, right, back September of 21. And I go all the way down here to, I believe this was the post big payday dump to 0.2 cents. So I'm using that as kind of my flagpole. And then we ended up with this giant descending wedge, or calling it a pennant's kind of pushing it, but it's definitely a descending wedge. But theoretically, what occurs when you get a pattern like that, and you can see pretty clearly on this. Let me see if I can zoom in a little bit to make it a little more clear. So you saw the bigger pattern, and then you see here where we broke out of that pattern in, get my eyeballs here. It looks like the middle of February. We finally broke above it, right? And we had never done that all the way since all-time high. We had not broken this top line. Broke it, came back and retested it, had another pump up to like 7.6, came back down in March, about a month later after we broke out, and tested it again. So those are all strong indications that you're validating that line, right? If you've got resistance bouncing against it, which we had all the way back to all-time high, then we had a rejection here. It bounced around trying to get above it. We got above it, come back and tested again, got, bounced again, and then came back and tested again. Those are strong indication that that's for real, right? So the idea then with where we are now, and this is where, like, having been a trader and knowing that most people end up wrecked, I'm absolutely not advocating that anybody use any of this charting stuff that I'm sharing and trade with it. The reason I'm doing it like I'm doing it is to keep the fear and the exuberance at reasonable levels, because when you FOMO in or you get fudded out, that's when you get wrecked, right? Mm-hmm. So the idea is like, here's that last retouch we did in the middle of, or I'm sorry, this is where we were at the bottom of the white wedge back in December. Beginning of February, around here, is when we started really seriously talking about V3, right? So that was around 3 cents. And then, over the course of like about the next 6 weeks, we did a 4X. We went all the way up to 12 cents, right? So that's kind of where my moon math is coming from on mainnet launch. Because if we did a 4X in anticipation of V3, what do you think the possibilities of us doing a 4, 5, 10X as soon as mainnet's announced? The flip side of that is, how hard is the sell the news mentality going to hit? And how quick are you on the button to try to sell the pump? And do you even want to sell the pump, right? Because I think there's going to be a lot of anticipation. My thing has been, I'm stacking all the hex I can for the free copy. So it's like, my window is even narrower if I wanted to try to take profit on that short-term pump. But to me, it's like, if I've got more hex on both chains now and I can stake that and earn yield, I don't need the money, so I'm not looking to try to sell it. What I'm trying to do with my charts is that, when things start pumping, I bought at 11 cents, because I thought we were going to break the top side of this channel and maybe work our way up to like 14, 15.
I did
too. Yeah, so I kept buying, even though there were a lot of indications that were telling me that we were going to roll over there, right? And so luckily, I didn't chase it up to 12 cents, right? I mean, I stopped kind of on the line, which was around 11. I think my highest purchase was like 11.1, right? And then we hit the top of the line at like 11.8, and then we wicked all the way up to like 12.6. So at least I didn't chase it once we got beyond the line, because I wanted it to come above that line, come back and retest and see if we really had a breakout. So that's where I stopped my buying. And then as it started to come back down, I'm starting to look for new patterns. So you can kind of see here, it's a blue and a yellow and an orange line that make kind of like this rainbow ascending parallel channel. And you can see all the way back, like, we started kind of loosely forming this channel. We were kind of catching some bottoms here, coming up, started to indicate a new top line, hit it again. Typically, I like to see it 3 touches on the top line and 3 touches on the bottom to confirm a pattern. And then what's interesting is when you make a channel, the midline can come into play. So when you have a parallel channel, there's like a little dashed line that will appear in the middle. And a lot of times that'll be an area of resistance or support. So we're bouncing around in this channel. And then as we got down here to the bottom of the orange channel, I was hoping that we would come back up to the top, right? But we broke down. So when I did the measured move of that breakdown, it took us down to about 6.8 cents. So one of the other things I look at in my patterns is horizontal resistances. So from that bigger chart that I had earlier, and you'll see on this one where I have some that are highlighted in green, they have a green box that corresponds with those. There's an orange, which is kind of like this middle ground, and then red, which is stuff that's below the current price action. these are areas where the pattern in the past has been those particular price points have been areas of resistance or support, or both. So they've, so for example, 6.8 has been one that's we've had a ton of price action in and around 6.8. So if we go all the way back on that bigger chart that I had, you can see multiple touches as resistance as we were coming up to it and got rejected. And then when we broke through, we came back and retested off of 6.8. So that's where I kind of developed these horizontals. So those come into play too. So to keep it from getting too weedy for people, what I'm looking at is patterns and horizontals. And then I mix in the EMAs. And that's where you got the yellow squiggly line, the green, the teal, and the magenta. I also threw in a 300 MA, but that's kind of just for shits and giggles. So these are all areas to kind of watch and then give people indications of how high we're going to go or how low we're going to go in any particular move. So that way, if they're buying at 11 cents and it starts to drop, they don't freak out and think that we're going to zero. It's like, oh no, we're going to catch some resistance, around 10 cents, we're going to catch some more resistance around 7 and whatever. And you never know where the bottom's going to be, because this whole thing that we've all been dealing with for 2 years is like mainnets any day, right? Pulse chains launched in 2 more weeks, right? It's like, that's why I was buying at the top. I didn't buy at the top, but it's like I bought at like 39 cents, because I wanted copies, right? Like every other idiot. And hindsight's 2020. Had I known we were going to be 2 years out, maybe I would have taken some profits, but hindsight's 2020. So I'm happy that I bought and staked. But knowing what I know now, I'd have taken some profit, right? Because it's like at some point you got to be sensible. But anyhow, with the current pattern we're in now, like we fell out of this orange channel, and I knew that like the measured move to fall out of that would probably get us back down to 6, but it's never a straight down, right? So it's going to take a while. So it bounced around, and we did get back. We got to that level, the measured move that I anticipated. But by that point, we had started forming a new channel. So I got a touch here at the top. I got another touch, almost 2 touches here. I got, real solid support on the bottom, 2 bottle, 1, 2, 3, 4, 5 body candle touches on the bottom. So I'm real confident in this magenta descending wedge that it's legit. And you can see that it's boing, 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 boing. And now boom, we bounced right off the bottom. So I had limit orders set, which everyone do your own research. It's absolutely not financial advice. If you've been here for the whole stream, I'm an utter degen. It's like I remortgaged my house to buy more Hex, which I'm sure Corey is probably, going to like disown me now, but for such crazy behavior. But I'm in a position where I can afford the payment. The interest rate is really low. I've done my due diligence on the risk tolerance that I have for this kind of thing, and I'm okay to do that. I do not recommend mortgaging your house. I do not recommend getting credit cards or doing cash advances to buy crypto. You should only ever invest what you can afford to lose. And dollar cost average in, dollar cost average out. Those are the smart ways to do things. People like me that are showing you some TA can give you can help educate you in where you want to enter and or exit, right? So we bounced off this bottom. I actually got some fills down around 4.8, which I was really stoked about. Nice. I was thinking we might wick below that. And then bam, we've taken off to the races. And, and then it's funny because we got a little bit of resistance right there at that midline. So I was talking about how like midlines can come into play. And then what happened? The current channel we're in, or current candle we're in, what did we do? We broke out higher, and then we wicked all the way down right to the midline. So that's where it's another point to kind of watch. Like, okay, if you think we're going to the top side of the channel, maybe a good buying opportunity would have been at the midline, which it's right at 6 cents, or sorry, 5.4. And then we wicked right there. So, if your limit order was big enough, it's another discussion because limit orders don't always fill. I hear people complain about that a lot. I've got a spreadsheet somewhere. I'll try to find it and send it to you guys. Just so people know, if they don't understand how they're free, they're not free. The other side of the trade is paying your gas. So let's say that you're trying to do $100 limit order. And I did a trade the other night. It was like $50, $55 to buy some Hex. And so let's say it's $20. Well, now you're trying to buy $100 worth of Hex, and there's going to be $20 worth of gas that the other guy's got to pick up. Was he going to buy it at your limit price? Fuck no, he's not going to buy it at your limit price. It's got to dip 20% below where your market is, or your price is, for him to even break even for his gas costs that he's picking up. And it's not even him necessarily, it's bots that are doing all this, right? So the majority of the time. So, and in addition to that, how much liquidity is at the level you're trying to buy at? Because maybe a bunch of other people get filled first that are market buying or have bigger limit orders to where the price has to move less. Because it's like, if you're doing like a $5,000 limit, I've never had a $5,000 limit order that didn't fill, ever. But, if you're trying to do a $200, $400, $500 one, it depends on the gas. If the gas is really cheap, maybe. But I mean, you're going to have to move significantly below or above your price, depending on if you're buying or selling, for that order to even have a chance to fill. So anyhow, I anticipated that we were going to move to that line and maybe wick below, set some lower limit orders in there. And I had limit orders all the way back down to this white line because, like I was saying, the retest, right? And we were getting precariously close to that. So I held on to some of my dry powder and was like, hey, if we dip, maybe we get a little bit of resistance down here. I had another horizontal at like 4.4, and then the top of the white channel is like 4.2. So to keep from getting front ran, I set some limit orders at like 4.25 and 4.45 above those other areas that I thought would be resistance on the way down, support on the way down. But luckily we turned around, and that's kind of my logic. Cause like I had somebody busting my balls the other day. It's like, bro, it's like, you got all this TA, and it's like, you were bragging about buying at like 7.6. And I'm like, yeah, because at the time that was the bottom of my channel. Right. And it's like, and you don't know if we're going to end up in a situation like we did in February where boom, we got a 4X in front of us.
It pivots.
Boom. And like that, it's like, there's a famous, whatchamacallit somewhere. I don't know if it's like a chart or like a table or something, but it talks about how in the life of Bitcoin, I think it's 30 days. Like if you weren't a holder of Bitcoin during those 30 days over the past 12 years or however long Bitcoin's been around, you would have missed like 90% of the gains.
Those big monthly moves.
If you were on the sidelines waiting in dry powder for the dip that never came or whatever the fuck else you were doing, if you weren't a holder during those specific days, you missed the vast majority of the pumps because it rips. I mean, we've seen it over and over again. Yeah. And so that's kind of my logic with this too. I'm trying to make educated guesses on when to DCA in, and I'm not buying every day because maybe my charts tell me that it's looking likely that we're going to, retest the level. So big question now for everybody, because I know there's a lot of hype around this one more test before mainnet and whatever. Do we hit the top of this channel and then break out? And then just so people understand how measured moves work, a measured move kind of gives you an indication of how high or low something's going to go if it breaks your pattern. And it is the height of the pattern. So these vertical lines in magenta, those are the same height as the parallel channel itself. So if we break that, the measured move of that takes us up around 8.4, which happens to be another horizontal. So that's something else I look at, like confluences. If you've got two indicators showing you a particular price point, that gives that more credence, right? So my thinking would be, if we break out of that, are we going to go straight there? Probably not. Maybe we wick above it and we come right back down the channel and come retest the low. And then, because it's a descending channel from right to left, and time moves from left to right, and time moves from left to right. The bottom of the channel is not at 5 cents anymore. The bottom of the channel a few days from now is like at 4.3. Right? Because we're not dealing with horizontals, we're dealing with this descending pattern. Exactly. So if we hit the top and then it's another rejection like we had up here, maybe we come down and test the bottom of this one more time, and then maybe we whip down to the white, and then it's go time. You don't know.
Could, if mainnet doesn't launch this week, that's a possibility, because we see this all the time. Richard will tweet and people think we're there, and we'll see a little green candle, and then there's a sell-off. It's like,
yep.
We've exhausted the buy the rumor, sell the news, I feel like, to an extent now, where it's like everyone's just kind of, and you get a little, like that little green candle right there, that's from Richard's tweet yesterday.
Absolutely.
We are close. And
yeah.
And if we don't see mainnet launch in May, I think we definitely come back and retest that white line.
That could be down there, and
for sure. And there's a possibility we even break back into the white wedge. That would be, it'd be an awesome buying opportunity, but it would be very disheartening. I really think, I've been calling May for a long time. My thing was that I would not put it beyond Richard and his team to already be working on a copy of Uniswap V3, because I believe it was April that it was no longer, unavailable.
Yeah.
Right. It was licensed. So So my thinking was, may make sense, because they're probably working on it already. And then they have that up their sleeve if they want to roll that out. I don't think he would immediately. I think he's happy with PulseX being a V2 copy, primarily because of the way that you do liquidity providing. It's got to be, equal on both sides. And because single-sided liquidity is kind of a trader's, it's like, it kind of feeds the trading narrative and can, especially with all the liquidity that's going to come in from the fixer bot, it's just, you're begging people to drain those pools if you've got single-sided liquidity. So I think that he's going to hold off on that for a while. But if he's got it up his sleeve, then he couldn't do anything with it until May anyhow, right? So that's where I always kind of thought May was probably a go time. And I mean, it sounded like we're closer than ever. So, I mean, I'd be very, very disappointed if we didn't have this thing out by the end of May.
I think, yeah, me too, man. I think it's here. So I do hope, looking at your chart here, I do hope we bounce off that we test that resistance and come back down to support one more time.
Yep. Hey, you wanna? I know we're gonna start wrapping up here in a minute, but you want a little bit of baby moon math?
Well, before you do, give us just a little bit of moon math, but also I'd love for you to talk about this a little bit more. Tom's asking, why would EHEX pump with the news of mainnet being live? Wouldn't the masses send their energy to Pulse and PHEX?
I used to think that, but I don't think that no more. But, yeah.
Tom, to address that, I think you're definitely going to have a lot of sell the news pressure, but there's a lot of money that's tied up in Hex staked and otherwise, and those people are going to be motivated to hold that price up. So, that's what you see a lot of times with people are, providing a lot of liquidity. It's like those are guys that don't want to see the price go down for whatever reason, right? So I think that's going to be part of it.
Yeah, I'll add one more piece. I feel like, with the long wait we've had and just the really testing of the market, I think the market's kind of got shaken of its confidence in Pulse Chain coming out. With mainnet launching, that confidence and that assurance that this whole thing worked out as planned is going to bring so much money into the marketplace. And that includes, I believe, now on EHEX too. Just because of that confidence now. Like, oh, he did it. Let's go. I'm going to buy. Now they're going to buy. And they're going to buy green candles.
Yep, I think so too. And I mean, that's because nobody likes buying anything more than a green candle. I mean, you can scream from the rooftops. And it's absolutely the best time to buy when it's just death and destruction on the chart. But man, try to get somebody to crack their wallet open when the chart looks like that. It just doesn't happen. It's hard. It's the same reason I backed off on the AA when the price was down. I was like, I don't know about this, so it's crazy, but it's like, but to answer his question, I think, there's going to be a lot of people that have more confidence in the Ethereum chain.
Yeah.
Pulse chain's not proven. So yeah, you're going to get your copy over there and they're going to be looking for a dip, right? Because everyone's anticipating that the EHEX price is going to dip after the copy, after the fork. And there's tons of people on the sideline waiting to buy that dip. So how deep does the dip go if there's a ton of guys trying to capitalize on it?
And it just seems like everything we try to think that's going to happen in crypto, especially in crypto, it's the opposite that happens every single time. We anticipate one thing, and then what happens? The opposite. We're like, damn. So now I'm just going to go the opposite. Like every time I see any narrative anywhere and or somebody saying something, I'm going to like, well, what does the opposite look like? Because that's what I'm going to look at. Like,
right.
Every time.
Dude, I mean, and luckily, like I'm not trading, but it's like my charts have been playing out so well. I'm not gonna lie. I've been tempted. I've been tempted because it's just like, dude, it's like I can like stack some more hex by just doing some small flips here, and I'm not, and it's not a ton, so it's not like I'm gonna wreck the price for anybody by dumping millions of hex like some of these dipshits. It's like it's possible. And I was looking at that midline, and I'm like, I could probably sell this little trading bag I got floating around that I don't have staked. And, I have a feeling we're going to go test the bottom one more time. Well, good thing I didn't, because now it's looking like that midline support and we're working our way toward the top. So it's like, but it's that case in point, dude. It's like, I thought we were coming back down, and it's like, there's still enough exuberance to be pushing up. So we'll see how the day closes. But I mean, I think we get to the top of this channel, like if not today, by tomorrow. If anything, we'll get a little rejection off of these where the cross is on this 100 EMA and 21 EMA, which is right around 6.2. But, I think by tomorrow, if there's not too many sellers that come in and try to take profit off of this little move, that we're going to hit 6.3. I mean, I just think, if I had to guess, if I I'd say we're going to hit 6.3 and probably pull back a little bit. Now, do we pull all the way back down to the bottom, or do we just come back down to this midline and test and then come back up and then get our breakout? I don't know.
Midline, if we go back to midline, that's like 5.
Midline is this diagonal green line. So midline, if we broke back down to that tomorrow, that would put us at 5. No, wait. Sorry. My glasses. I need like trifocals. 544.
5.4.
Midline tomorrow would be 544. You know, we're currently what, 593, 594. So yeah, about a half a cent. Half a cent.
I hope we test the bottom over time.
Dude, I'm down for it. I mean, I've still got that. I mean, that money I had in those limit orders down all the way to the white channel. That's still part of my dry powder bag. So I'm,
still money you can deploy. Yeah.
I'm ready. And then, I mean, maybe we'll talk about the TradFi nightmare later, but that was part of the reason I was running late to even get here for the stream, is that my bank has finally shut off wires to Coinbase. And apparently it does not meet their risk tolerance. So after my dad's doctor's appointment that I got to bounce out of here for in about 10 minutes, I'm going to go to my bank and I'm going to get a big cashier's check of every freaking penny. And I've got a checking account at another bank, and the other bank's going to get all my business now. It's like, fuck those guys.
Have you used Trust Token?
I haven't yet. Do you know what? There's a lot of like RG and Kinetics were talking about that a lot. And I have not messed
like Trust Token.
I need to look into that more.
On and off. B of A allows it. B of A would always flag like all my other centralized exchanges that I would try to use. It's it's an escrow account. Although Dane had one problem one time, I've never had a problem with it.
What doesn't look like crypto?
Yeah,
so you're not getting those red flags, right?
There's
well,
no fees.
If they go digging, it looks like crypto, and
yeah, because that's kind of how RG and those guys were pitching it to me. That was like, well, it just looks like your money's coming out of an escrow account, so it's like you closed on some real estate or something. They don't fucking know, But I don't know. But it's like, and it was just, I don't know. I was a little shocked today, to be frank, because it's like I've sent a lot of money to Coinbase from that particular bank since 2017. And it's like, really? It's like, so now all of a sudden I've hit some weird tipping point where it's like, nope. And I mean, it could just be because I was wiring shit like once a week. I mean, lately I've just been hammering it. So, I mean, that could have been the thing. Like, what is this guy doing? It's like, I don't know about this, but it's, so whatever, it is what it is. But we can bitch about TradFi another time. But did you guys have any other questions about? Oh, wait! I got to show you a little bit of moon math.
Give us the moon that you think.
Okay, I'm going to give you.
Pulling that up. Do you think that if you had to pick one, do you think the price is going to potentially be higher on Pulse Chain or Ethereum as far as Hex is concerned? With call it into 2025 next crypto top.
Man, I don't know. It's like, I mean, if you're looking at the history of like Uniswap, right? I mean, it did some X's. Right. But it's like, but it didn't do Ethereum X's. So to me, I think the testnet is, and I'm a validator now. I got 2 validators running, so I'm excited about that. But I think it's, testnet's showing it's trading at 3-to-1, right? I mean, it takes you 3 pulse X to get one pulse. And everybody was kind of equating the sacrifice value as what we should be priced at, which was the inverse of that. It was like 3 or 4-to-1 the other way. Because there was 4 times as much money that went into the sacrifice for Pulse X, and the total token supply is almost the same. So people were thinking, we were going to start out at like 3 zeros and a 4 for Pulse X and 3 zeros and a 1 for Pulse, but the way it's trading is the ratio is split. So I think that the demand is such that it's kind of proven my point. I think people kind of are expecting Pulse to do better things. I think what's going to happen is Pulse is going to pump first, and then we're going to get a big pullback, and then Pulse X is going to do its thing. So I think it's going to be like
are you more bullish on EX or PX?
I think we reach parity quick. The problem is are we at 2 cents on both chains? You know what I mean? Like, we're at 6 cents now, right? So, maybe we're 3 cents on both chains. How big of a dump is there going to be on EHEX? That's the big question. I don't think it's going to be that dramatic. Because so much is staked. A lot of the liquid is the OA. And, and it's just these trade tards that are out there that are, trying to make a stack, right? So it's like, how much damage can they do? The issue is going to be, I think, when liquidity starts getting pulled.
Yeah.
Because you're not going to get copies, right? I mean, the way I understand it is, or at least you don't want copies of stables. So as that liquidity starts getting pulled, I think my charts are going to go out the fucking window. I mean, I think the volatility is going to be bonkers. I mean, we could get spikes to $1, you know, and we could crash to a penny. I mean, you don't know, you know, I mean, it's going to be some mad wicks, I think, as that liquidity pulls out, unless the OA comes in there and tries to stabilize things on the EHEX side until the bridge is open on PHEX or on Pulse. And then, you know, as things stabilize, then doesn't matter. But I think, you know, a case for EHEX is people are more confident in Ethereum. It's been around forever. Pulse is an unproven chain. So, but, you know, with that being said, you know, it's a Richard Heart ecosystem project. Hexicans are Richard Heart loyalists, right? And so that's obviously going to be the coin on Pulse chain that's going to get the most action. So, I mean, there's a chance that maybe PHEX even ends up higher. And then what's going to happen? People are going to start FOMO. And if they see a higher price on PHEX than EHEX, they're going to start dumping their red candles on EHEX and go buy the green candles on PHEX.
Right.
Because people are stupid, you know? So it's like, and I you know, I've done it. I get it. You know, you chase the green candle thinking you're going to be smarter than the masses. But I don't know, man. I wish I had a better answer for you. But but one thing that's interesting about this kind of shorter time frame chart is, like, you know, we saw back here in January when we first, you know, we were finding our lows at the bottom of the white wedge, and then we started working our way up. Same kind of rule applies here as far as like the big pattern, as far as like making it like a flagpole situation. So if you take this and you say, okay, let's say we break out tomorrow, right? What's really curious about this is that takes us up to 41 cents, which is just a sneeze away from all-time high. So if we do a full measured move from this pattern, which looks like a big bull flag, you know, this looks more like a flag than the wedge, right? Yeah. So that takes us to 40 cents. And a lot of times these wedges play out with the same slope as the flagpole. So if that's the case, you're talking about late July, we're at 40 cents. So that's pretty bonkers. And then to really just kind of like make myself look like a lunatic, if we go back over to the longer term chart that I was showing you guys with this giant formation that's like years old, right? And you do that same thing where you got, here's the flagpole and this big wedge. This flagpole goes to almost $13. And if we measure it from the original breakout, which was back here in February, like if we get a retest, maybe I'd pull it down here and measure from there. But if you measure it from the actual initial breakout and you're following that same slope, I didn't change anything when I moved this over here, then you're looking at potentially $12.5, $13 by the end of the year.
Oh my God.
Now, with
which sounds
mathematically, this doesn't. So, are you? I want to check.
Dude, don't make
mathematically, right? The flagpole. You're saying that it often goes at the same slope and it goes the same distance. Is that accurate?
Yes. Yeah. It often goes the same distance. It's not always the same slope. The same slope will play out a lot of times, but it's not as consistent as the height.
Yeah.
So the distance is pretty. I mean, that's quantifiable. I mean, you can see that like in longer, like my Pulse Bitcoin chart. You can see that happen over and over and over again. When these patterns break, they move to that point, and then that's where you find new resistance. And then they got to form a new pattern and start doing what they're doing again, or maybe they roll over and come all the way back down. You know, it just depends. But as far as the slope, it's not as a strong indication of, because timing is the hardest thing, man. It's like the distance of a move is not that hard. If you can say, well, maybe it takes 2 years to get there. If you're trying to pick a time on top of the distance of a move, you're adding another variable that makes it exponentially harder to call. So, I mean, so when I say like this is like Looney Tunes moon math, it's Looney Tunes moon math. It's like $12 by December. I mean, that's crazy.
Maybe $12 December of 24 or even 25, right? It's just a year or two elongated out, right? And that, I tell you what, if we have $12 Hex in 25, I just don't know what I'm going to do. I really don't.
I don't know either.
Puerto Rico by then, thank God. But I just don't know what I'm going to do, man. I mean,
Right. I feel you, man. I feel you. Well, guys, I've had a ton of fun. I'm looking at the clock. It's like I gotta go. Unfortunately, it's like I gotta run my dad to a follow up appointment.
Real quick,
would love to come on again. If you guys want to have me come back sometime, I'd love to come on and like shut up and listen to you guys.
Absolutely. How do people find you?
Yeah, chill.
Yeah, easiest is on Telegram. That's where I am more often than anywhere. It's just like on my picture there. God, I need a tan. I look like dog shit. It's getting warmer, so I'm going to cut this stuff off soon, and then I go back to looking a little more presentable, maybe. But at Tobi Wan _Hexobi. If you lose the underscore, that's my backup account. So that's still me. It's just a backup account. But that's where I am. I'm daily. I'll do like it's TA time with Tobi Wan. So I do my little daily updates for everyone, so you can kind of be educated with your dollar cost averaging in or out. I'm not advocating trading, but
even adding like, hey, I bought the dip here. You put that once in a while. You're like,
oh yeah. I mean, and it's like,
did you?
Yeah, somebody was busting my balls about that the other day. He ended up blocked because he was a prick. But it's like, man, you can't be buying all these dips. And I'm like, bro, you want to see my fills? I'm like, I'm doing it. It's like, I got no reason to lie to you. It's like, do I wish now that I had not bought at 7.6, that I didn't buy at 11.2? Sure. But at the time, that was the most, with the information I had, those made sense. So that's the way I'm looking at it.
Sure.
If you wait for the bottom, how many people really pick a bottom? Anybody? It's like gambling. It's like how many people tell you the stories about how they left the casino with thousands of dollars, and how many times do you hear the story where they got absolutely obliterated?
Yeah, we just need to be in the general area. We don't have to be perfect. You're in a general area, man. You're going to do just fine because this is crypto. Yep. Exactly. The most wrecked is your money on the sideline, and then you just watch it run from you, and then you regret it. You regret it for the rest of your life. So. Use what you can afford to lose, So, don't be using your car payment money or your mortgage or whatever. It's like, you're gonna, don't do that. Don't do that for sure. But guys, thank you so much. I hate that I got to run. I would love to keep talking to you, but let's do it again soon. Yes.
Yeah. Sounds good, man. Appreciate you being on.
All right. Thanks, Solids. I'm going to bounce. Ciao.
Yeah. Cool. That was a great show.
Bro, that was fire.
That was excellent.
Oh, he's so good, dude. We got to have him back on. I'll reach out to him. It takes a while to get him booked, to have him come back around. But man, that was absolute fire. And we didn't even touch into about the Hex documentary. I'm sure he can talk a little about that. It would be a lot of fun. And so, man, this was a good show.
We've got a little bit of time. Let's get to just a few of these questions if we can, and then we'll jump off here in just a few minutes. How about that?
Let's do it.
Where did it go? There was a great question here about CBDCs. Maybe I can't find it. I remember it though. So the person wanted us to comment on our thoughts. All right, here. Can you please share some ideas on how we can protect ourselves from CBDCs and getting our bank accounts frozen by the governments? Thank you in advance.
Randy Hilarski, you here? No.
Right. Where's Randy when you need him? Right. I think that it really depends. There's a lot of things to factor in here. I think one of the biggest factors is to say, like, how much capital do you have? If you have more capital, then you can have more to your strategy, right? Even going to the point where you're having bank accounts in other countries and citizenships in other countries and things of that nature. I think there's a lot of wisdom in that. If you get to a place where you have enough money, that makes sense. Mm-hmm. But as far as not, let's assume that most people here are not those people, getting your bank accounts frozen. So if you have business bank accounts, not having LLCs with the word crypto in them, there's a lot of wisdom in that. We've got to go and change one of our LLCs for that purpose. Things like using trust token to onboard money, because it's not like as crypto facing for most of these banks when they go and they look at it.
Correct.
That's really useful. But as far as CBDCs, you could move to Florida, where DeSantis has made it illegal to have CBDCs in Florida. Otherwise, there's just so much unknowns about how that's going to work. I think that in the end of the day, we'll be operating just like Randy says, or there will be a CBDC system that you'll be operating in, as well as a DeFi system that you'll be operating in. and you can choose how to balance your funds between those two things. I know for me, I've taken all the extra capital that I have sitting on the sidelines for Pulse Chain and Pulse X. Corey has done the same, and we've moved it. Like, it's sitting in crypto right now. We're not waiting on
right
that.
on this little bad boy right here.
Right,
I'm my own bank. I hold my own keys. I'm my own custodian. Man, it's a beautiful thing.
Yep, beautiful. Absolutely. I took some loans to buy the dip too, but I'm well able to afford those. I despise loans and promise to myself to never take any, but this case was unique.
Be responsible. Leverage is always it's a great tool. The rich use it all the time. I never speak against leverage. It's using it responsibly and knowing how to use it, because using it irresponsibly can get you wrecked. So
yes,
that's just
absolutely. And I've taken some too, so I'm comfy with that. And I
got a HELOC on my house. I mean, I love HELOCs. They're one of the best loans you can ever get. You can put them in, put the money in. It's like a credit card. You pay it off. You're not paying no interest. And then when you take the loan back out, you're paying some interest, and it's an open door. I love them.
Yeah, agreed. You guys should have more people watching. Hey, if you guys can help us out, smash the likes, retweet it, subscribe. All that stuff is helpful. We want to do our best to pump everybody's back. So if you're in the assets that we're in, it's in your best interest to do so. Of course, we have, of course, we want the follows too, and we want all that for the algorithm. But we mean it when we're really here to try to pump everybody's back. So appreciate the comment there. One of my favorite channels. No, seriously, it means a lot. Seriously, there's a lot of other people you could be watching at this time of the day. So we mean it when we appreciate you guys being here. We really do. And then there was a couple more. Let me see. Yeah, thanks for what you do. Absolutely.
What up, bro, man?
Absolutely. With any trust token walkthrough videos from the community you recommend? I can't think of any, but honestly, trust token is pretty, in my experience, is pretty easy to use. It's pretty straightforward. You can go to app.trusttoken.com. And as always, make sure with any crypto websites, you're at the correct website, but it's app.trusttoken.com. And when you go there, you can go and register. You have to go through all the hoops, do your KYC, all that type of stuff.
Yeah, you still KYC.
Yeah, but it's pretty self-explanatory. You put in your bank account, you put in your wallet address. They give you the wire instructions. I take a picture of the wire instructions. And that way, when I go to the bank, I have it all. One tip there is make sure you follow the wire instructions perfectly. If you do not, and you miss some of the things that they need for you to put in there for the wire instructions, it can get rejected. I had one that was stuck in limbo, and it was a fairly significant amount for 3 weeks.
It's a long time.
Back and forth with trust token and the bank, and I'm like, look, just send it back, and I'll redo it then. But I can't have it sitting in the ether. I need access to the capital. So there's a tip. If anything, the banks are now the risk factor. I couldn't agree more.
I agree with that. Absolutely.
Yeah, Epoch 5555 about to occur.
Did it happen? He posted that a little bit ago. It might have happened by now.
I think it's happened. Yeah, I think it's happened. I haven't seen anything. I've been monitoring my Twitter. I haven't seen anybody go. Hold on.
Are we live?
I don't see anything here that indicates that we're live.
We would know if we're live, dude.
It would be in the comments.
This chat here would be blowing up. Red Squirrel would be all over that. Red Squirrel's in the chat.
Absolutely. Cool. Yeah, great story, great content. Absolutely. Gamma's in here. My first time tuning in. Love the stream so far. You'll see me here more often from now on. Hey, appreciate you. Absolutely. Got it. Cool. Red Squirrel, we see you. Cool. So yeah, seriously, we appreciate you guys being on. We will not be on our regularly scheduled times Thursday or Friday. We have we're actually doing a really cool free event, a crypto event that's largely, set up for our real estate investor buddies, no coiner people, to give them a rough idea of how crypto works, why it's important, and ideally to be able to help onboard more people in the Pulse Chain, Pulse X, Hex. So we're really excited about putting that on. So far, we've had almost 1,000 people register for the event. So that'll be really cool. We're doing our best to onboard the world. And so we will not be here the rest of this week, but we'll catch you next week. If mainnet launches, you can find us on Twitter. We'll be all over. It'll be a blast.
And Monday, guys, just for some housekeeping, we have Walrus coming on. So that's going to be a really good show. The guy is one of the giga brains in the community. And like I said, I always want to be the dumbest guy in the room. And he's one of those guys, man. You just want to take notes when he's talking. It's awesome.
Agreed.
So that'll be exciting.
Yeah, so it'll be fun. So with that, guys, appreciate you tuning in once again. Smash the like, subscribe, retweet. All that stuff is really helpful. Hope you have a great rest of your week.